What's up, you guys? My name is Victor. Today I'm going to be showing you guys how to invest in stocks. Now in this video I'm going to be showing you, I'm basically just going to go over what stocks are, how you should purchase them, research on companies, what the S&P 500 is, and other things like that. Before we start this video, please feel free to smash that like button down below and subscribe to my YouTube channel.
Let's hit 500,000 likes on this video. What's good, it's your boy? Can this video hit 500,000 likes? Can this video hit 500,000 likes? Please just do me a favor and go down and smash that like button. Smash the like button! Friggin' like.
Alright, without any further delay, let's get into it. I'm going to go over what stocks are, and stocks are basically an investment in the company and that company's profits. So when you buy a stock, you're essentially buying a piece into that company. So that's why you'll see a lot of millionaires and billionaires actually invest in other companies to help their money grow more. And this can help you actually gain wealth, because the more money and time you put into buying stocks and other stocks, bonds, Bitcoin, investing in Forex, all that other stuff, that actually helps you build up a lot of wealth. The more money that the company is making at that time, the more money you can actually make as well as the stock grows for that company. So a lot of people ask why you should invest in stocks consistently. I often say just because you can get into the habit of saving that money and not touching it. Another thing is you can never really time the market. The more you try to time the market, the more you're likely to fail. A lot of stocks typically pay out dividends, and that's basically the more shares you buy of a stock, the more money you can get paid out in dividends. It's not really a lot, but let's say you put in $500 into a stock and they typically give out dividends every year. Within 3 months, they might give you an average return dividend of maybe $4 to $5. So it's not really a lot, but at the same time, it's free money. So yeah, a lot of people often ask why you should hold on to stocks long term, and that's just because research often shows that 10% is gained over time within the past 5 to 10 years of every stock. Whereas if you buy and sell consistently every month or so, you might gain money short term, but you also might lose a lot of money long term. When it comes to buying stocks, I know that one of the things I wish I knew earlier was the S&P 500. And the S&P 500 is basically investing into the top 500 companies of America. And that typically does help you get a lot more money, because it always has a return rate of about 6 or 7-ish% every year. And at this time, I'll probably just show you guys the top 10 highest companies in the S&P 500 right now, as of April 2020. Now, when it comes to buying and trading stocks, I would say to use M1 Finance and sometimes Robinhood. I like to use M1 Finance just because it has fractional shares, and because of using fractional shares, it's a whole lot easier, and I guess, yeah, just easier for me to buy stocks. So Tesla, let's say a Tesla stock is at 800 right now, and I wanted to just own 10% of it. I would put in $80 instead of $800. Robinhood has not implemented fractional shares yet, so it's just a whole lot easier for me to just hop on M1 Finance, buy 10% of that, and just let it sit there. Same thing for the S&P 500. You could buy as little as $10 worth of it, and it could still gain some money over time. It's just about how much money you want to put in. I think if you want to start using M1 Finance, you have to deposit $100 first, and then from there, the minimum deposit is $10, which is still not bad. I mean, again, I would just suggest putting in $30 to $50 every week. If you want to hop on your calculator, I'll probably put it side by side, but if you save $30 a week, that equivalates to about $1,500 at the end of the year. And if you do $50, I think it's about $2,500 at the end of the year, and that's just without gaining any interest. So you might gain about 5% interest, you might gain 10% interest. Can't really say, but you will more than likely gain money from there. Now, when you want to buy separate stocks, not investing into the S&P 500, but let's say you see Apple's been going down recently, I would suggest looking at the news to figure out why their shares have gone down. typically it could be like, oh, our earnings didn't do so much, so they didn't sell enough iPhones for that year that they expected to sell. Or it could also be that something happened within the company, like maybe, let's say the CEO was having an affair with the secretary or something like that. That can cause a stock price to plummet a lot. Now, it might go back up, it might not go back up. So that's why I always try and tell people, like, do your research, triple check everything you see just to make sure. Another great example actually is Tesla. I think over the weekend, Elon Musk was tweeting a lot saying that Tesla's price was way too high, and then you just see Tesla stock prices just start falling down slowly but surely. So I don't know if that's him trying, I don't know if that's like a ploy or something for him to try and get more low shares of stocks bought up or something like that, but I think it's, I don't know. Actually, I don't know. Well, that's all for this week, guys. If you enjoyed the video, just like, share, subscribe. I'll definitely have a lot more videos coming out, maybe every week or so. I'll definitely try and try and show you guys how to trade on Robinhood and M1 Finance more often. Next week, I'll probably show you guys how to buy stocks that are currently placed on a low value right now, like maybe AMC. AMC probably dropped to like $2 at some point, and then it shot up to $5. Then it dropped back down to $4. I think I bought it around $3, so I've still made a couple bucks out of it. And I just definitely think it's going to shoot back up at some point in time. So that's it for this week. Enjoy. Have a great week.